Wealth creation is perhaps one of the most common goals for all of us, and one vehicle that enables this goal is mutual funds. But still, barely anything is talked about how to judge and analyze these funds, mainly on the pretext that looking at the historical returns should generally do the job. However, investing in mutual funds is like navigating a financial landscape, and understanding how to perform fundamental analysis can be the compass that guides your decisions. At the roots, fundamental analysis is a powerful tool that helps investors evaluate the health and potential of a mutual fund by scrutinizing various aspects. In this video, you'll learn about the key components of mutual fund fundamental analysis, the most underrated set of knowledge there is to take from YouTube. So let's not wait anymore and begin our journey into the world of mutual fund analysis. Before we dive into the intricacies of fundamental analysis, let's establish a foundation by understanding what mutual funds are. A mutual fund is an investment vehicle that pools money from multiple investors to purchase a diversified portfolio of stocks, bonds, or other securities. The idea is to provide individual investors access to a professionally managed and diversified investment portfolio. Now, you might be wondering, if the funds are professionally managed and sufficiently diversified, where does fundamental analysis matters for them in the first place? Well, fundamental analysis is to investing what a health checkup is to your well-being. It involves assessing the intrinsic value of a mutual fund by examining various factors, helping investors make informed decisions based on the fund's potential for growth and stability. You'll understand this better as we move forward in this video. For the key concepts to consider, we have in the first place diversification, the backbone of stability. Diversification is akin to not putting all your eggs in one basket. A well-diversified mutual fund spreads its investments across different asset classes, industries, and geographies. This reduces the impact of poor performance in one area, enhancing the overall stability of the fund. Analyzing the fund's diversification involves looking at the types of assets it holds and their distribution. Further, if you look to invest in two or more different mutual funds, you must check whether those funds are investing in the same securities, which might negatively impact their individual diversification mix. Next step is evaluating historical performance. A mutual fund's past performance provides valuable insights into its potential future performance. Analyze the fund's historical returns over various time frames, considering both short-term and long-term trends. However, remember that past performance is not indicative of future results. It serves as a reference point, but other factors must be considered in conjunction, such as fees and expenses. Just like any service, mutual funds come with costs. Understanding the fees and expenses associated with a fund is crucial. Look beyond the expense ratio and consider transaction fees, sales charges, and other costs. Lower fees can significantly impact your overall returns over time, making it an essential aspect of fundamental analysis. Next, also consider earnings and dividends, the key items from the fund's income statement. In fundamental analysis, we examine a mutual fund's earnings, much like scrutinizing a company's income statement. Earnings represent the profit generated by the underlying investments. Analyze the fund's historical earnings and see if it consistently generates income. Dividends, if applicable, are a portion of these earnings distributed to investors. Now, you might have heard this for equity, but a careful analysis of the management team and strategy is also vital for investing in mutual funds. The people behind the scenes play a critical role in a mutual fund's success. Evaluate the fund manager's track record, experience, and the overall stability of the management team. Additionally, understand the fund's investment strategy. Is it actively or passively managed? Does the strategy align with your investment goals and risk tolerance? Answering these questions can help you build trust on the specific fund house you choose to go with, making it easier to hold your investments over the long term. Speaking of long term, how can we forget considering economic and market conditions? Fundamental analysis extends beyond the fund itself to include an assessment of the broader economic and market conditions. Consider the economic indicators, interest rates, inflation rates, and geopolitical factors that may impact the fund's performance. A fund that adapts well to changing market conditions is often better positioned for sustained success. And finally, place a special focus on risk assessment using volatility and beta. No investment is without risk, and understanding a mutual fund's risk profile is integral to fundamental analysis. Volatility and beta are common measures of risk. Volatility gauges the fund's price fluctuations, while beta measures its sensitivity to market movements. Assessing risk helps align the fund's risk level with your own risk tolerance. Doing so would provide you with foresight of how the fund might move and which moves are worth acting upon. As we get to the end of this video, we hope you understand that mastering fundamental analysis for mutual funds involves a holistic evaluation of various factors that impact a fund's performance and stability. From diversification and historical performance to fees, earnings, and risk assessment, each aspect contributes to a comprehensive understanding of the fund's potential. Armed with this knowledge, investors can make well-informed decisions aligned with their financial goals and risk appetite. Remember, fundamental analysis is an ongoing process. Stay vigilant and adapt your strategy as market conditions evolve. That's it for this video. Make sure to like and subscribe if you enjoyed watching it. We'll see you next time with another financial knowledge shot. Till then, happy investing.